Okay, welcome. I'm going to point out what I'm seeing in the stock market right now. I'm going to start out with the triple Qs chart. We're going to get into the stock market technical analysis. That's what this channel is all about. If you guys find value in the content, drop me a thumbs up. And if you can do it early in the video, I think it helps the algo. I don't know, but I do appreciate that. All right, we're going to start out with triple Qs. All right, one thing I want to point out, and I'm seeing it kind of pop up. I noticed it yesterday. I was going to put out a video, but just was being lazy. Okay, we have this resistance level right here at 480, 401, right in that area, okay? And you can see this was resistance here. It was resistance here. They stepped in a little early there and sold it. And then right there, basically yesterday and today, we're right in that area. So this is a key level of resistance where we're likely going to get rejected. So the way I'm playing it is, you can short at this resistance level for a move down, or if you break above it, just stop out. That's kind of how I do it. And, if you get a breakout and you're starting to close hourly candles above that level, probably stop out because most likely the market's going to run up and make another new leg higher at that point because there's not much resistance really left after that. So this is our kind of last line of resistance. And the reason why this is resistance and not so much the all-time highs is you've got a lot more reactions right here. You got 1, 2, 3, 4 reactions, whereas the all-time highs is just kind of a single, all-time high point. All right, so if we turn down, then we still have that bigger picture chart in play, which is the weekly chart. Here's the weekly chart on triple Qs. Again, this is tech sector. And really the things that I'm looking at is this candle right here on the weekly. That big red candle, that's a bearish engulfing candle. And we had follow through right there. That second candle was additional selling. So 2 weekly candles that signal, that really help confirm a top in the market on this weekly chart. So it doesn't have to be the forever top, or but it could be. It could be the top of this bull market as we enter into a bear market. That's completely possible. And again, it's a bearish engulfing. If I roll back in this rally from 2021 and I look through all these weekly candles, you can't really find too many bearish engulfing candles with confirmation. You had a little bit of one right there. There's a bearish engulfing right there. See how that candle came and it pretty much engulfed the previous candle. And then the next candle was a big red candle. So that confirmed, and there was definitely a lot more selling because we got all the way down here to 297.35. So from that confirmation, from the high to the low, it was about a 12% correction. And then here, from the high to the low so far, we've only moved down about 7%. So there could be another 5%. Another, longer term, we also have this trend line right here marked in blue on the weekly chart, and that's held the support for all of 2021. So as we get down there, that's where you'd expect it to hold this support. That's likely the area you'd want to cover a short trade. And, you could flip long or, and then obviously if we break that, we got bigger things going on. All right. Okay. Looking at the triple Qs daily chart, also the potential for a head and shoulders top. You've got a shoulder here. You do have the head right there. And then you've got kind of this complex shoulder, which is, 2 shoulders basically. So that's a head and shoulders top. And you wouldn't really want to see the market break above that 401, resistance level. Otherwise, it kind of negates that head and shoulders top pattern. But if it is going to hold true, and the thing is head and shoulders are not my usually favorite pattern to trade. And we don't really have a super clean neckline on this head and shoulders pattern, so it's just a potential. It's not the cleanest. What I really like more is just that bearish engulfing candle on the weekly chart. I feel like that's a much better candle to trade against, looking for more downside. So at this point, what I would look for is a stop somewhere above that 401 area. Give it a little wiggle room. Obviously, you need to be flexible in terms of giving it, for the potential of stop raids. They can run up and kind of pop it up there. So you got to be flexible on that. But then I would look for this to roll over all the way down to here, about 373, 373, 378, somewhere right in here. Basically, this trend line is what I'm watching, this upward trend line. And so a run down and hit that trend line would be the short-term trade that I'm kind of eyeballing. Okay, a couple trade setups. NVDA. Now this looks like a short trade. It's not actionable yet, but there is a setup here that I want to point out. And I talked about it in a couple videos ago. Clear uptrend line here on the daily chart right there. So that's kind of our short-term support line. And then rolling out, we've got a longer-term support line really back here marked in blue. COVID kind of crashed through it, but this is starting in 2019. And you can see we tagged it here, here, here. So a couple tags of support. I don't know what I have these for, but a couple tags of support there to validate that longer term time frame. But moving back into the shorter term on this daily chart, we have a divergent high. So right there I have it circled. Negative divergence. See how the RSI and the PPO are just completely dropping off like that. And guys, I don't know where my RSI and PPO labels just went. I just noticed that. But my top one here is the PPO. You can use the MACD, moving average convergence, divergence. It's very similar. It'll give you the same effect for the most part. And then down here is my RSI. I'll have to get those back after I get off this video. But clearly negative divergence. See how we're trending down like that. That's what you want to look for, is when momentum is trending down, these momentum indicators moving down, and yet price still moving higher. So right through here, still moving higher. This is the bag holders typically. These are the people that don't really read technicals and they don't know anything basically. All they know is price is going up and they're happy, and when price goes down, they're sad. So they just buy when things are moving up and they sell when things are moving down. Very common for retail traders. Okay, so then moving into a little bit closer, you can see right here this daily candle. So we broke that trend, and that's your sell signal, a break of the trend, but it recovered, right? So that daily candle, they were able to recover that support line right there. So just a quick little stick save, basically, or bear trap, whatever you want to call it. And then the next day they rallied it. So these are shorts that had taken this short, and the next day they're covering. They're getting out of that trade, saying that didn't work. Let's move on. Okay, so that's a one false breakdown, but we still have clear negative divergence, and we're still just kind of trading along this trend line. So what I'm watching for is the next break of this trend. Okay, the next break of this trend, and you want to see it impulsive. You don't want to see it just barely break. You would like to see it, a big red candle breaking down through. But I'll be watching that hourly chart. If I see those hourly candles start to break and close below that trend line in an impulsive manner, then that's going to be the sell signal. And I think that's really going to set us up for a pretty sizable move down. This thing's been a rocket ship, so it can easily come down pretty good. Likely going to be some sort of support right here. And also it looks, if I go to the hourly chart, looks like we have a little bit of support right there at 288.75, we'll call it. Okay, so that's your first level of support. So I just suspect on the break we'll probably get right down there. But we've already hit that level once, and this is where they turned it, and brought it back up. So I think we'll probably get down to 272.61, just a quick breakout candle right there. Not much of support. We've got a gap to fill, 266.60. So that's likely going to be, in fact, I'll probably move this down right there. I think you probably run down and fill that gap. So that would be a good level of support. But ultimately, I think this would start the downtrend in this stock and could potentially move us down to this lower trend line all the way down here. So lots of potential for a trade to the downside. And from where we're at, we could be a 30% drop or so. Things to watch for. Okay, net. This trade's already started to play out, so it's definitely not the most objective area to short this thing, but I did point it out in the past. So clear negative divergence here on net right there. See it on the RSI and the PPO, and see how price was continuing to grind higher, and it was grinding higher right below this trend line marked in red. This is coming off your March 2020 lows. See how I have all the support circled, and then we broke, and it was tagging resistance. So here we're just walking up from underneath resistance while putting in negative divergence. Basically, the best setup you can look for, and then you look for a sell signal, and that's about as clean and clear of a sell signal as it gets right there. Big old red candle as a breakdown. The sellers were just smashing that thing down, and it's pretty much just been moving down in waves ever since. So I think we got another wave down, and you can see here on the hourly chart, well, it shows up on the daily, but we're starting to flag out right here. As I move into the hourly, we're kind of bear flagging, so break of the flag, I believe, is going to set us up for a move, probably down to this trend line right there at about 110, 111, 110.50. Right in that area, you can see we've got some support. So that was resistance back through here, and then once we broke above, it was support. That's where it looks like this thing's heading. So trade setup, and you'd probably just want to wait for a break of the flag to the downside. And then, it should likely continue lower. So there's your setup on that one. Again, not the most objective area to short, because the most objective area would have been right there. I have it circled. That's your sell signal. And that would have been the area that, the lowest risk area. Now it's definitely higher risk, but wanted to point it out. Okay, gold. Gold's not doing much still. Just you can see here over the last, pretty much almost a month now, 3 weeks, we've been just kind of grinding around in this area. Bigger picture, still holding bullish trend starting back in 2018. I've got all the support lines marked out on this daily chart. And this is gold bullion, so I just look at, it's gold bullion. It's showing the actual price of what they're selling for. And, that's, we're basically just continuing to hold that bullish trend. We're kind of in the support area. We could go a little lower from here, because we haven't actually hit that trend line. So maybe a move down to hit it, but ultimately still above support. Now the miners are getting smashed today a little bit. You can see GDX, they're smashing that thing down. And so the miners can be a lot more volatile, obviously, but as long as gold's holding this bullish trend, I suspect a lot of this noise in the miners is just temporary, where it's just volatility, basically. Chop, all right? It's just chop. Moving up, grinding down, moving up, grinding down. So yeah, we'll just continue to watch gold, and the miners should follow. Another tell about that, I think this is chop. I see some of these miners, like a lot of the miners are getting smashed pretty hard, but then the biggest miner, Newmont Mining, is only down 0.6%, barely down basically. So just kind of grinding around. So that's kind of interesting to see the largest gold miner really not selling off, just stabilizing, and then a lot of these other gold miners getting smashed pretty hard. So I'm not sure what's up with that, but we'll watch gold bullion. I still like it to the long side, although it hasn't really taken off yet. We got to give it a little more time, it seems. And MGM, you can see we're down a little bit today, about 0.5%, nothing major, but still holding below this resistance level right here. And so the last 2 days we tested it and failed, and then today we're kind of trading down. So again, that just goes back to this trend line right here. You can see support right through there, and then we broke, and now it's resistance. So I'm looking for next leg down, pretty much down to this level at about 34.05. That's a key level. That level came back from here. You can see that right before COVID, that was our former resistance level. So maybe that'll hold as support. And we had a couple reactions on that level right there. So looking for a move down to 34, about $34. Again, if you're shorting it like I am, then you want to step in a little bit early and cover slightly above that level. That's a key trading strategy, to cover right above key support. And we'll wrap up with Apple. So Apple being the largest stock, very heavily weighted within the indices. And that's kind of what's going on right now, is you've got just a couple FANG stocks rallying, and that's keeping the indices propped up. So I don't know if that's by design, or if big banks or funds are doing that on purpose. But regardless, the chart of Apple, so far we've got this bearish rising wedge. It's a pretty big pattern going all the way back to September 2020. Big bearish rising wedge. You can see it just pretty much right there. And it's not a very steep wedge. Usually the steeper the better, but this wedge is just, not super steep. We're breaking out to the upside. This is a low probability breakout, but a couple things I want to point out. Reason why it's a low probability breakout is it's a bearish rising wedge pattern, so it's a bearish pattern. But oftentimes you can see these breakouts where you break to the upside of these bearish patterns, pretty much completely doing the opposite of what this pattern's set up to do. Then it fails and breaks down. Okay, so look for that. Doesn't have to happen. Right now we have a breakout. On Apple, we do we're starting to kind of burn through the negative divergence. So unless we turn down today, and so you can see here, this is the PPO, and you can see we're starting to kind of pop above it. We've got kind of equal highs right now. So if we start to sell off today, then this will probably pull back in, and we'll still have that negative divergence, meaning we have a new higher high in price, but a lower high in momentum. So right now, if we don't get that pullback in Apple and we continue a little bit higher, we're going to burn through that negative divergence. So that's bullish in general, at least on this stock. Now on the RSI, you can see as I zoom in, we still have negative divergence, meaning see the momentum here is lower than before. And then let me zoom back out. And you can see basically price is obviously a lot higher. So we have it. Now we need to see a sell, we need to see probably selling to start to come into this stock today, maybe tomorrow, to help confirm that negative divergence on the RSI. If we get that, then, we could look for Apple to sell off. If Apple doesn't sell off and Apple just continues to move higher, it's going to be really hard for the market to continue to move lower in any meaningful way, at least the indice, right? Triple Qs and SPY, the S&P 500, just because of that weighting. Now, you can see individual stocks move lower like MGM, but in general, the indices will stay propped up if Apple continues to stay propped up. So levels to watch. Right now, we don't have any resistance overhead. We're just at all-time highs. Nothing to really track against, nothing to really short, nothing to, all we need to do is just continue to watch this to give us signs of what maybe will come in the general market. That's all I got, guys. If you're new, you can check out the Stock Market Technical Analysis course, link in the description below. I put that together a little while ago. So check that out, and I will catch you on the next one. Bye.